Good morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculptured Pico by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Pries.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, and then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
Today has the potential to be one of those hold on tight sessions. Futures are reaching a major shift in the geopolitical headlines, and whether you agree with the story or not, the only thing that matters to us is this. Price is responding with strength, and the tape is telling us momentum is back in the driver's seat. When the market flips from fear to relief this quickly, it can create the kind of one-directional tempo that pays the disciplined trader, while punishing others who chase late. Good morning and welcome to another edition, Team Day Trader edition. Another Team Day Trader edition of the daily market analysis. Settle in, grab your coffee, and let's prepare for today's trading session. As always, if you're new, subscribe and explore the resources linked below. Good morning, James. Good morning, William. What's William say here? Jason. It was great for me, but definitely feel like I got lucky. Either way, it was green. Hey, good job, man. That's all that matters, right? Sometimes luck is, hey, I'll take luck. I'll take luck any day of the week. Yeah, I got nailed. I have my levels, and, I kept on getting, my stops kept on getting hit, even though, say I was right, but the retracements and the moves were a little bit much. And then I had to, I had to chase like at the end of the day, and then that didn't even work out. But I did hold the position overnight, and this morning is looking good. So I'm definitely starting out the day very well. I had the position on from yesterday, but wow, that price action. I was ranting to the wife yesterday about it. So anyways, let's get on to today. A couple things I want to talk about today before we get into the charts is one, we do have PCE coming out. I don't believe this is going to be a big market mover. It comes out at 10. We're going to look at that. GDP final revisions. Looks like it's delayed. We're going to check the calendar out just to kind of double check. There's nothing on here as far as Y charts dashboard that I feel is something that we got to go over. I just, I'm a routine kind of guy. So I do, I just kind of, I'm a creature of habit. So these are my habits every morning. Nothing on the dashboard that I think is important. I did want to highlight this because I thought this was definitely something, I didn't know. And one, if anybody wants to, because I did this yesterday, is right here's the source. Can you see the source? Oh, my picture's in the way. Let's see if I can move that. Is there a way to move this? There we go. We'll just do that. If you guys want, the source is down here, right? So you guys can look it up. But I found this picture insightful. And so if anybody wants to dig into that, I'm going to dig into this a little bit more. But I thought, sometimes people talk about, United States has a lot of power and a lot of levers we can pull. And there is a lot of levers, and we do have a lot of pull in global, kind of in global macro. But I also, things that there is a lot of countries that do hold our assets. And, I just thought this, I'm sharing it with you guys as I thought it was insightful. You guys possibly can, check it out for yourself. But, the EU, they hold roughly about 10 trillion. You kind of add this up. There's 6 trillion in equities, 2 trillion in treasuries, and then 2 trillion in corporate bonds. And I found this funny because let's just say geopolitics going forward, Trump pisses somebody off or whatever, and they start in Japan the same way, where they start bringing their assets back to their own homeland. They can be disturbing into the markets. They do have some leverage. I know Trump yesterday, is kind of bashing all these other countries. It was like he reminds me of sometimes I'll do the same thing in conversations, and it's like this passive aggressive, right? So you kind of do this passive aggressive talk, and as if we're holding all the cards, and then nobody else can do anything. And so I thought this was an interesting chart. I'm just sharing with you guys. Nothing to be like, hey, there's, something to be actionable right here in the now, but definitely something I encourage to just kind of understand, keep in mind, these countries don't have no leverage whatsoever. They do have some leverage, and whether they exert that leverage or, onto us is, to be seen. They haven't for many, many decades, and we've grown globally with this, respect for one each another, and but that can always change. People can change friends, and friends can become enemies, and enemies can become friends. So this can if there ever is in the future something goes down, at least you're not surprised by it, I guess would be the takeaway. So anyways, let's refresh this chart because I thought GDP. So GDP did come out. We're at 4.4. Again, nothing market moving, right? So, I don't think today is going to be, there's nothing on here that's going to be market moving. This GDP, it feels like headlines come out, or if you were watching yesterday, everybody's like, oh, GDP tomorrow, and, core PCE is coming out tomorrow, yada, yada, and it's going to be market moving. Not necessarily. We already got CPI coming out, or came out. So this is going to be like just unless it comes out something ridiculous, right? Like if this thing comes out at like 0.4%, then yeah, that can be market moving. But if the forecast is 0.2 and we kind of come in at 0.2 or 0.3 even, I don't think there's going to be a much of a big reaction. You get into 0.4, 0.5, and yeah, but so at 10 o'clock, unless this is something ridiculous, then but I would say don't expect it to be the catalyst. unless it's something crazy. But again, you just kind of have to know when these things print. And core PC does come out at 10, so don't get me wrong. When B period starts, that first five minutes, because usually there's a reaction within the first 5 minutes of this coming out. So that first, from 10 to 10:05, that'll be your reaction, and then after that, you ain't got to worry about it. So we'll, again, watch it. It's at 10, 8:30. GDP came out. No, no big market mover. I wasn't figuring it to be, but that's what it is. Obviously, the Fed watch tool that we watch every day. Again, there's a shift way back down in here in 2027. That's way far away down the road. Nothing's going to happen next week. Oh, that was what I wanted to do. Let me bring that over. What do we got here? Let me bring this back because I did want to look at that next week. So again, next week, right, we do got the FOMC presser on Wednesday, right? So I'm sure everybody knows about that, but if you don't and you're hiding underneath a rock, FOMC is next week. Also, we are not going to get an SEP, right? So there is no SEP, a revised SEP that came out in December. And so we don't get that, we won't get that next week. And so it's just going to be the rate decision and then the presser. And again, going back to the watch tool, right? Fed fund futures, market participants are not expecting any kind of rate cut. It's just same old. That's been about 95, 96 for the last, really since December. And then we're not getting one again, first cut until summer and then towards the end of the year. And again, as time goes on, we'll just watch, but it's been relatively muted. It's been nothing to kind of angst about. So with that said, and getting the news out of the way, let's get into the morning market analysis. So today, okay, as of 7 o'clock, and I wrote this, it's 8:30, right? So there has been an hour and a half. We were up 31.5 points. We're up now 41.5. There was a slight mild bullish skew of 1.27%. Again, we're not getting into the strong or extreme volume delta. So if there is going to be a gap, right? So we may have another gap. There's still a possibility for a gap, right? So again, we'll talk about, or maybe we'll talk about, but gap rules possibly in play. We are opening out of balance. And again, the correction of inventory, there's not a lot of skew. So, we'll have to, again, I'm not, it's only when skew is extreme or even strong, anything in around that 3-4%, that kind of really, helps us out. We're out of balance. I think this, when I think about the overnight skew, I just think that's, everybody is, from yesterday's price action, there is this, feeling of, chasing in the market. And so, right, that this doesn't, this would be something I would expect. Now the difference would be is if we're sitting up here and then everybody is so bullish and there's an extreme skew, that's where you can get a little bit of, right, everybody is long at the highs and you kind of get this correction in skew off the open. So hopefully I explained that, I articulated that so it's understand that a small slight long skew is what you would expect. And has a lower probability of correction, whereas whenever you close, especially like a day like yesterday, and you close, and then if we would have came into the market and there's like 3, 4, 5% net long volume skew to the bull side, right? That has a higher probability, especially where we're sitting, where everybody's long in the hole, and then boom, you get this like liquidation break, and that corrects, that inventory corrects. So that's not the case here. So just kind of context, understand that's the context. That doesn't say like, hey, it's a 0% probability. It's just not probable. It's more probable when you have that extreme delta. 10-day ATR is 68 points. Things to note yesterday. That yesterday had that roller coaster feel, man. Just the big swings up, and then right. So we started up. We opened right. So we overnight took off when Trump started talking. So we kind of took off at around, when did we take off? What time was that? Yeah, like right at 9 o'clock. So a half an hour before the open. And then we opened here, and this price action, we screamed higher, came back, took out a period low, right? And then consolidated here, and then you ripped it again. I mean, that roller coaster, again, I have probabilities, and where it is low probabilities when you back test, where in a context like yesterday, I shouldn't say that, right? Because you had the VIX up at close to 19, in the 19. So, but under average context, it is low probability where you take out a period low, especially when you shoot up and do B, C, D period, and then come in. It's one to retrace, but it's low probability where you retrace and take out right, that kind of a period low. So that did happen yesterday. That was a little frustrating, right? Kind of hit my stops, and then I had to get back in. That 2 o'clock ramp came in, and then again, it comes back, and then takes my stop out again, and then we go into the close, and then in the close I added a position on at the close. So, and then that's the story. So that's how yesterday played out for me, just to give everybody even the best of us. But that's why you honor stops, because who knows how this market plays out. So keep your stops tight. With that said, that was the roller coaster. On an hourly chart, the big clues is buyers need to defend this momentum. So this is it is bullish, and I am under, again, I have day trade set up 8, right? So I am looking for the rip your face off continuation early, right? So in these moves, and we can look at, whenever you look at an inflection low, like here's and I'm going to just use this as an example. Whenever you hit this inflection low, and that is the really the start of the move, this thing goes ballistic for the next few days, right? Like you open up, let me delete this, right? You open up here, and it just takes right off from, right? You closed here, and then you open at the highs, and then you rip. It's that kind of, that's the context in which we want to see today, right? So if yesterday is not a false trap, right, and it's a bull trap, if it's not, then what we should expect and should trade is the rip your face off continuation early. It's a clean drive, strong acceptance, little to no hesitation. That's the tempo. So again, context down here, right? Context is extremely important, right? It is always important to judge the strength of any direction move in terms of market internals, overall pattern, tempo, and where we are from the current range, where it sits in relationship to prior areas of balance. So we are out of balance, right? possible gap. And then because of yesterday, this needs to be a clean drive, strong acceptance, and little to no hesitation. That's day trade setup 8, right? And that's the trade that I'm trading right off the morning. And then this is the if. I use these words a lot, if then. If that momentum doesn't show up on the open and it turns into chop, overlapping the two-sided trade, then I am gonna, I said we. I don't know why I put we in. But I am gonna pivot quickly and trade what's exactly in front of us with day trade setup type 6. So this is that day where it is important to be responsive. I know a lot of times I'm always like, hey, be patient, wait for the IB. This is that day where if you're not in already and you weren't in from yesterday and right, you're allowing the trade to go, this is that trade where I don't want to say there's some chasing. You definitely have to, watch. You have to be like in tune with the market and be very quick and responsive because you're kind of chasing on the open. And if that ends up being wrong quickly, right, you got to really like let that trade go and just take the loss, right? Because you're kind of buying high. But in the context of this chasing that market, that's the kind of environment that today has a sense of playing out. Now there is the gap, which we'll look, and I am very hesitant in the. I'm. This is very important, and I'm trying to establish and articulate the context, because I don't want anybody to get killed trading today. We do have a gap up, and I'm going to show a couple charts where these charts today needs to get cleaned up relatively quickly. Again, it's that thing of the little to no hesitation off this open, right? So again, key levels to watch. These are decision points, not a checklist. I highlighted that. I thought that phrase is important in today. Is that the first line in the sand is the 69.24 and a quarter. That is the right. As long as the buyers can stay above the area, the market is still saying dips are likely opportunity, not danger. If we lose 69.24, right, and price can't reclaim it, that's your warning signal that easy long narrative is breaking down and we shift to a more defensive rotational. This is where day trade type 6 comes into play type of day. Above 69.38, watch that key reaction. That's the, excuse me. That's going to be the first initial reaction, right? It's 38. And then 24 is that, I always talk about there's the, where you're wrong and whatever bias you have, that is the, like, you got flip your mindset. If you were bullish, there's these line in the sands that if that gets breaking, like, that shouldn't have happened. It's the shouldn't have happened thing. So 38 is a reaction level. And then 24 is the, we should never see price below that today if it's bullish. And then again, watching 69.85 is going to be the continuation thesis, increases probabilities of an upside push. And then again, if we reject hard, that tells the market where we want to whip back into range behavior for that rotation. And I'm going to show that. I'm going to show all this on the chart. And I, usually I don't go through this as deeply, but again, on days like today, I think it's important to emphasize a couple extra things. And I do want to say on the recap and strategy, don't confuse. And I highlighted a few of these things and underlined them because don't confuse excitement with edge. Okay. Let the open prove whether today is the momentum day or a balance day, then execute the correct setup with discipline risk. If you can do that, especially on a headline driven session like this is, you're trading like the top few percent. So with all that said, let's get into the charts. And I'm going to start off today in the charts by talking what I am worried about and I am watching very closely. Is one, the mags. So this chart here, we all know XLK, right? Technology holds about 36% of the S&P 500. And we do know that the NASDAQ hasn't made a new high for like months now. It's like, what, 4 months, I believe, that the, hopefully not over Greenland. Anyways, sorry, James, I just seen that. If, what context is that? Anyways, by the way, since I got squirrel, since I've looked at the chat, if anybody wants to see any kind of stocks really quick, because we should have some time, then put it in the chat right now. On the max, we know that the highs haven't been made in the NASDAQ, right? Technology, whatever, for 4 months. And this, again, this is that line in the sand. This is a weekly chart. And then this is the day chart. And I know everybody's talking about this broadening out rotation, right? But if we're going to get the indexes and, whether it's the S&P or the NASDAQ to start ripping, to start really trending and get out of this hot mess, right? Then this needs to push off these lows and we almost need to get, instead of the, broadening out, the less broadening out. And you need to get the XLK, which is, again, that 36, almost 40% of the market, of the S&P, right, to start ripping. And this needs to like come in, and then, this is one day. You're not going to go from 63 to 69 in one day, but you need to start seeing some kind of price action like this right here, right? Where these catch a leg and they really start ripping, right? So when you look at, and also, so this is my worrisome, is that this chart has damage. And even though yesterday was what felt and feels super bullish, it's one day. And right, this, we open up and then it doesn't take off, right? This just kind of rolls over, and then right, into the future we start going lower, where this has a little bit of overhead supply kind of weighing on the market. So these things, as you're trading, especially today, I would keep an eye on this, on the mags. I would keep an eye on this IGV, right? Software. This chart, when I look at this chart, like this looks pretty beat up. This looks pretty beat up, and this is a weekly chart. And again, this is days. And, we're down here at these lows. Now, again, this is fairly oversold, right? So is this where you kind of get this bounce and then, this starts moving lower and then it just rolls over? That's that's what I want you to watch, because if this is an inflection low, and when I say an inflection low, like an inflection low, that's an inflection low. And then you run up. So if this becomes in the future, the, woulda, shoulda, bought it here, because now we're sitting at 117.50 and you could have bought it at 95.40, and it's like that low into the future. If that's the next major inflection low, this is where you're going to see it in a context like yesterday, where, for whatever reason, you don't give a shit, but the price action is telling you this. And so these things have been weighing on the market. And if it is to resolve higher, you should see the mags pick up. You should see IGV pick up. If we went to, if we go to, let's change this to green. Change this to green. If we go to NVIDIA, right, this needs to start ripping. and we need to start targeting 200. You know, if we go to Apple, this needs this chart. Like, look at the drag that the Apple's been, right, since early December, and it's just been a drag, right? So again, in today's context, while you're day trading today, this is the things that you'll need to see. Is this just so much overhead supply that, yeah, you get like a dead cat bounce and then, you know what I mean, but eventually we roll over? Or is this that inflection low, the inflection low, and then you get a run up, and then you get a run up? So again, is this the inflection low and now we get the run up? And again, that's to be told, and that's what you're monitoring for. That, I think today is, you know, I don't talk about this a lot, but I feel like with yesterday's index price action, you know, and I know energy is good, and there's been this kind of broadening, and there's been this like, oh, Russell 2000 values catching a bid. But really what moves the market is, as I guess, the S&P 500, and especially as a day trader, these heavy weighted stocks in the index needs to pick up. This has been a real drag, right? And so you need Microsoft to pick itself up off the ground. If not, and this is just, you know, the market's going to roll over as these, you know, we've started, or this is rolled over. If these just kind of, this is just too much overhead supply here, and yeah, you get a dead cat bounce, and again, you know, roll over. So again, that's the going, because, you know, you had Trump like, oh, market's going to double. These things like, all right, if that's the case, it can these you know, how would that happen? You know, think of like an engineer, like, all right, decompose the internals. Like, if the market's going to go to 71, 7,200, what would need to happen? I'm sorry, but you're not going to get energy. I don't care if energy doubles. You know, it's only like 2% of the index. So energy could double, literally do 100%, and you are not going to move the index. I mean, you're going to move, you know, it's very little, you know, but when these single stocks and these indexes, you know, when you get XLK, you know, you need this index to be pushing. You know, you need this to push. This is like 36%. You know, you need that to go to really start getting the S&P up and about. So I don't want to kill a horse, you know, I don't want to beat him to death too hard, right? So, but I do believe, you know, with yesterday's announcement, the way we've been chopping, if that was the catalyst, and, you know, Trump, whatever, in the news or however, and everybody feels like, hey, we're good. Macro, we're in a decent spot. Employment's like not crashing, but not, you know, super, you know, we're not exploding. And if inflation is, yes, high, but manageable, you know, then why not? Why not, you know, see 71, 7,200? But again, you're going to have some things that work with you. And I think today is that thing. You know, everybody always wants to catch, you know, everybody wants to catch this, you know, or this, or these, you know, you're always trying to catch these lows. And so, right, that's just it, is this that inflection low on a longer time chart? And that's the money. And then, you know, this thing just takes off, and, you know, you don't want to be late to the party and, you know, be up here in price and then look back and be like, oh man, I wish I would have, could have, should have, you know, bought that. I'm bringing you to that point where this could be that moment. So you know, that's what we need to watch. So with that said, whew, all right, let's go to today trading. So today, the levels, let's go over the levels. Why are these important? This 30.6938 is right in here, right? So it's right here, right? You're still, right? You're not down. This is the 24. The 24 is down here, right? So if the market pulls back, right, and you're still holding to 20 and that LVN right here at 24, then the market is still constructive. So I know we're sitting at 56. So this thing could run down from 56 to 24 and it still be constructive. Now 38, I believe, would be the, right, when you look at this move lower, we could open up and kind of set this trap where you get a low, and I call this a trap low, and then the move goes higher. And this is like an undercut, and that's anybody's went through my education, we talk about how traps form and how to identify a trap. This would be a great trap where, again, it's very bullish. You still have space between price and the 20 period moving average on the hourly chart, right? But it traps that low where it undercuts and everybody gets bearish, and then that becomes the low of day in and around that 38, and then they take it back off. And again, this is an hourly chart. So this is not a 5-minute chart, right? This is an hour. So, right, we're opening up right now. If we were to open up right now, we're opening up in a gap. So we got gap rules. Skew is not that strong. So, it's fine to get a gap and go. If that plays out, we got, 30 minutes almost. But if it doesn't, we come back in, right? That's the opening trade, is a little bit of an undercut of that low, right? And then they take back off. So watch that setup, right? That's a trap setup, very easy trap setup to watch out for. And again, then this thing just rips. You got the gap here from Friday, right? This is Friday's price action. And then we opened up Sunday over the weekend and we gapped lower. And so in the RTH session, we did not fill that gap. That's why I was very bullish, and I bought contracts at yesterday's close, was because there was a poor high up here, right? So I was very confident that, okay, in this move, there was some longs that kind of got caught long in the intraday session, and then, right, they kind of got liquidated into the close, right? But that poor high in yesterday and then not filling the gap gave me a little bit more confidence to then buy long at the close, expecting that this is exactly what I was expecting, where, and in the overnight, right, price moved up higher, and now we're sitting. And so now anybody who, let's just say you bought long, chased it at the end of the day, but then got liquidated, had to get out of your position at the close, and then you're opening up price here, you're chasing now, right? And that's a hard trade for people to do. So again, you're kind of chasing that, and that happens in a very strong market. So I can't, if you think I'm wrong, backtest this, however you want to do it. These should be things that, if you're new, I'm highlighting. If you've been around, you should be like, yup, that makes sense. That's happened. I've seen that a few times. So watch how that plays out. And that's the mantra. So again, these little telltales. So with that said, I went through the levels. And again, if this market, right, if you don't get day trade type 8 and it's not the rip your face off, right, what have we talked about? We've talked about this distribution node needing backing and filling. So that's why I say, like, there's a lot of, when we look at XLK, we look at the mags, we look at IGV. If this market, and this is just a dead cat bounce, using that kind of language, right? We open up, we fill the gap, so that's unfinished business, and that gets closed out, and then we get some two-sided action, and the tempo is slow and grindy and whatever, because after yesterday, it should not be a grinding day. It should be a very powerful day. This is an inflection low. Think of institutional buying. When there is an inflection low and you have institutional purchasing, they don't ramp up on one day. They ramp it for like 2-3 days because they got a lot of money that they're putting into the market, right? So you're not going to get this grinding motion. That's not the context of yesterday going in today. And if you do, that's the kind of like, they're not pressing the bid, right? So if the institutional money isn't pressing the bid, this will more or less get exhausted and then we'll roll back over. And then you got day trade type 6 that's in the play. And again, as we talked about this, then, we just chop around in here. And again, trading easy and then hard on a spectrum, right? If this takes off, right, we're in the easy part because then we just know what's going to happen, right? Like this is going to go. And, the next few days into next week, like has a really good, a good trade, we have a really good sense of what's going on and it makes trading easy. If this thing rolls over and we stick in this chop, that's going to make for a little bit of a harder coming into everyday trading, because you're just going to get whipsawed. This price just kind of comes down and comes up and then comes down. You don't get a good pattern, right? Right. So we come down, we come up, we come down. You got some lows, but then this comes up and then you make a higher low and then it comes down and you get some broadening pattern. It gets choppy. It just makes for hard trading. And then as price is doing this crap in price, volume is right building out, and you're building out this distribution node. So understanding context is key, and understanding what the market is doing, what it has potential to do, and then if it does something, the context of like, all right, this is the kind of market that we're in, and I know how to trade accordingly. So with that said, we'll go to the trigger chart. Again, I like this. We're up here trading. Let me zoom that in. Make it a little bit easier. Right? So we do have 38 somewhere here, right? This is that undercut of the low. So if we pull back, undercut that low, trap, right? And then go, that would be the beautiful setup right there. Nice trap low. Everybody's thinking, oh, we're going to come back in, get sucked back in. They're targeting this low, right? It undercuts, that pulls up. People sell this thinking it's going to go lower, and then it doesn't, and then it keeps on going, and then you get a squeeze, you squeeze them. And that would be the just most beautiful setup trade gift of the trading gods that you could get. A little bit harder of the trade is, again, that 38 don't hold. We kind of get into this 24, still bullish, we're still above the inflection highs, and that's really the line in the sand. Anything deeper than that, then you're just in one of these things where, you're just going to get this deep correction, and, you're going to have to be patient. That's probably the worst trade, is that patience trade. And again, I'm, with yesterday's price action, I am less leaning, to short this for the move back in. That's not what price is telling me. With overnight skew positive, the bullishness from yesterday, price action, I don't see that as market participants. I'm not looking for the fade this move and then the fade it back in. I'm not looking at that. I'm just looking at I'm already long. And so now it's monitor for continuation. So I'm in a monitor for continuation kind of mode to go higher, not in a, I don't have a trade on. And so I'm looking to fade a strong trend, right? So not to say that you can't do that, but if you are going to do that, hopefully I'm building you a case of what to look for if you're wrong, right? And if you're right and you fade this open, right, then what needs to happen, right? You need to undercut that low. You need to hold the pull back, right? And that needs to hold. And then you need to like really get this thing down. You're going to chop probably around here. And then you need to see this get back into balance, right? And then again, this is where 6 comes into play, right? So you really need this to play out. So, and again, that's why it's there, because if 8 is not in play, then yeah, this is in play. But I'm always thinking like, hey, you're a trader. You can't come on these streams, or if you're trading, you can't trade and have analysis paralysis. You are going to have to take a shot, right? If you're a basketball player, you can't dribble around the court and just dribble and not shoot a basket. You will not score. So, in this game that we're playing, you're trying to make money. So you have to choose you have to make a choice. And so that's the thing. But when you make a choice, understand your setup and understand where you're wrong in that choice. That's right? Understand the assignment. As I always say, understand the assignment. So if you're coming into the market and say, hey, Jay, I'm going to day trade type 6 and I'm going to watch out for number 8. Okay. I'm not going to hate you on that, but understand that if this doesn't work out, then, you're here. And if this works out, or if this doesn't work out, then, you got to flip flop. So, be long, be short, but definitely understand your risk and know when you're right and when you're wrong. So other than that, that's about it. Otherwise, like I said, I'd like to see the trap low. I would add to my long on the trap low and get this up, and then add to it here. If this doesn't allow me to get a trap low and say we open up and it's a go, then I'm going to have to, use a little bit of discretion here. And let me back this up. Right? Say this is a range. We're building value, or we're building a distribution node here on a, excuse me. So we're building value here. So again, does this move up? And then if we get a pullback and then a move higher, right? So then again, this would be the add, right? So it's depending on what happens first. The juicy one would be the trap low, right? Off the open. Get a trap low. You don't have to worry about a gap. They pierce down, they open up, pierce down. That's the buy, and then they take off. The kind of, what I would consider to be a riskier move is we take off, pull back, and then take off. This had to be a little bit, you have to be careful on this one, because this could be, like I said, they fill the gap and then sellers come in. And again, if XLK, if the Mag 7s, if IGV, if NVIDIA, Apple, Microsoft, they're not kind of participating and they're not getting the good ramp, then yeah, this is a dead cat bounce off the lows. We dead cat bounce and then we roll over, and this becomes not a good buy. So this makes it tricky right there after you move up. So if you move up first, I'm not going to bullshit you guys. This is the trickier trade. I'd rather see it undercut the low, get a trap off the open, that move happen first, that gives me more confidence, and then we move up. And again, this won't be just naively buying this. I want to see a low get formed, right? So you got to see on a fast time frame, right? You got to see this kind of come down. And on a fast time frame, so again, a 5-minute chart or a 2-minute chart, you know, you have a move that looks like this here, which I don't know if you guys can see that, but it's you come down, you come up, you come down, you come up, come down, you struggle, right? And then it takes off. That kind of on a fast time frame, this pattern down here is what I want to see. You know, another one that I like, and again, we're kind of talking about this as a trap, is down at that low, they open it, they pierce down, come up, come down, come up, undercut this swing, and again, fast time frame, 2-minute, and then take off. That, you know, these two lows is kind of this like tricky pattern down at the bottom of the lows. Also on the number bar chart, I really want to see a 0 printed on the number bar chart. So there should be a 0 contracts, buy and sell contracts. There should be a 0 down here. I really also want to see confluence with that. I want to see confluence with market internals. I want to see confluence with all of those indexes and those single stocks. And that's why I have like 8 monitors in my office is so I can see all that in real time, open it all up, not have to flip through screens, you know, and that takes time. And right, it's all open. I could see it all big. I you know, stand up. I stand behind my desk and I can, you know, see everything very clearly. And then if I got to get out, I get out. If I need to add, then I add. So it's those things, you know, it helps me give context and, you know, be able to sniper in at inflection points. So anyways, hopefully that's helpful. We'll end. I don't see anybody throw anything in the chart. So with that said, if you're based or if you're vacationing and you're in Myrtle Beach, come and take a look at us at our office. Come on in, shoot the shit. Our address right here is 100 Sutter Drive, Suite 101 in Myrtle Beach. Here's our phone number. Here's our email address. Here's our website. So we are here. We are real people. We don't hide behind an avatar. And we really trade. So if you're looking for that kind of environment and that kind of resource, we're here. Otherwise, yeah. As always, learn, trade, profit. Have a good day trading. And we'll get to see you guys tomorrow before the weekend. So we'll get to see how this plays out. And we'll be back tomorrow. And after today, I think we'll have a good assessment. And then tomorrow should be an easy day. Again, Fridays are the easiest day of the week. The week's formed. We can look at weekly profiles. And we should be able to gauge a real assessment. And then Friday is always, you know, my best trading day of the week. So easy to capture what's happening, understand, and then, you know, where the market's gonna, you know, have a good sense of where the market wants to end for the week. So with that said, again, take it easy. I'll see you guys tomorrow.